Why do you need a hedge against inflation? How effective is Bitcoin as a hedge against inflation? First, let's talk about what inflation is so we can understand how helpful the other factors are in lowering it. Since fiat-based economies always have inflation, both experts and regular people have been looking for a hedge investment or instrument. In the past, investors who were worried about their money losing value because of inflation have found comfort in gold, stocks, and real estate. You can say that these goods have always had some limits when they were used as a hedge. Bullions, or commodities like gold and silver, are seen as less reliable than they used to be for short-term investments. In 2021, gold steadily lost ground. Real estate is not very liquid, has higher transaction costs, and needs to be managed and kept up all the time. When it comes to stocks, investors need to know a lot about money, which is something that most regular people don't know. More info about inflation. There is inflation when the value of the local currency goes down. The Consumer Price Index is often used to measure inflation, CPI. Inflation is the process of prices going up for goods and services, which makes the local currency less valuable. Because of this, it takes more units of currency to buy a certain item. Several years ago, a fruit box might have cost $5. The same basket now costs $8, which shows that people have less money to buy things. The graph below shows how the prices of a few things in the US went up from 1960 to 2021. A chart of US inflation shows how the prices of a few things have changed from 1960 to 2021. The Consumer Price Index, CPI, which looks at the weighted average of prices for different baskets of goods and services, is often used to measure inflation. The CPI number affects interest rates, wages, state benefits, tax breaks, pensions, maintenance, contracts, and other types of payments. 3. Techniques to protect against inflation. You can stop inflation by putting your money in high-value investments like gold, real estate, stocks, and cryptocurrencies. When people keep cash, they lose their money because it loses its value over time. People have put their money into safe investments like gold, real estate, stocks, and now cryptocurrencies. Since then, everyone in town has been wondering if Bitcoin will help protect against inflation. For something to be used as a store of value, it must be able to keep its value over time. In other words, its worth should go up or at least stay the same. Important things about these goods are that they last a long time, are easy to get, and are hard to find. Gold as a hedge against inflation. Gold hasn't always done well during times of inflation in the past. In the 1980s, there were times when people who owned gold got less money than they put in. According to data from Morningstar, gold's performance during times of inflation has been mixed in the past. When consumer prices go up, a good that is meant to protect against inflation is likely to go up in price. During times of high inflation, like the 1980s, there were times when people who owned gold lost money. Gold has become less popular as a hedge over the past few years. Even though the pandemic is over, people are less interested in gold than they were before. People still think that the metal is good for keeping its value over the long term, but they don't trust it as much in the short term. Putting money into real estate as a hedge against inflation. When the US housing bubble burst, it showed that real estate wasn't always a good way to protect against inflation. Real estate has long been thought of as a good way to protect against inflation. But the US housing bubble proved that this was not true. In March 2007, both home sales and prices fell sharply across the country. The National Association of Realtors, NAR, says that sales dropped by 13% from their peak of 554,000 in March 2006 to their current level of 482,000. Real estate values in the US and around the world are closely tied to things like government policy, national political and economic stability, neighborhood demographics and economies, geographic location, and infrastructure, among other things. Too many parameters make it hard for the average person to understand. Putting money into stocks to protect against inflation. Investing in stocks over a long time can help make up for the effects of inflation. Make sure the company has strong foundations. Some stocks do help you keep the value of your investment. Even if impatient investors temporarily hurt these stocks, they do well in the long run. But you have to remember that not all stocks are good ways to protect against inflation. Find businesses with strong foundations that are more likely to pay more dividends to their shareholders. Gold, real estate, and stocks all have ties to centralized entities. Traditional asset classes are controlled by a few people, which makes them vulnerable to pressures and biases. All traditional asset classes have a value that is directly tied to the policies of centralized authorities, like governments or federal banks. Since the centralized authority has full control over the situation, an asset that is so closely tied to a system that its owners can't change it isn't a good hedge. Is Bitcoin a good way to protect yourself from inflation? Bitcoin is a good hedge against inflation because it is decentralized and there are only so many of them. These things give both resilience and scarcity more power. When looking at the question, can Bitcoin stop inflation? Two important things to think about are decentralization and limited supply. Low supply is what makes things scarce. Algorithms have limited the number of Bitcoin, BTC, coins in circulation to 21 million. By the end of 2021, there will be 18.77 million Bitcoins in use. In other words, 83% of all Bitcoins that might exist have already been mined in the 12 years since the first one was made. Inflation happens when the government or central bank prints too much money, making too much of it. According to economic theory, inflation happens when the amount of money grows faster than the number of goods and services that are being made. This happens when prices go up because people have more money to buy the same amount of things. There is no oversupply because there are limits on how many Bitcoins can be in circulation. This keeps inflation in check. Also, the number of digital coins mined each year goes down by half every 4 years or so. Based on the planned supply, the number of Bitcoins created each year will be about half that of gold and will continue to go down, making it more valuable than gold because it will be harder to get. Decentralization makes things more resilient. Due to its decentralized design, Bitcoin is not controlled by a single group of people. With thousands of nodes all over the world, the network is well protected against attacks from the outside that might try to change its monetary policy, which could threaten the digital coin's scarcity. Bitcoin is the only currency that is as decentralized as it is. Coercion can happen in any authority or organization in two ways, through pressure or by giving money. But because there isn't a board of directors to buy off or a leader to sway, these things can't affect Bitcoin. Since Satoshi Nakamoto made Bitcoin, no one has been able to figure out who he is. Bitcoin stands out from other digital assets because it has a long history of success, even though it doesn't have strong leadership. Anyone can run a Bitcoin node, which checks the history of transactions and sends them across the network. Because cryptocurrency is not centralized, it is impossible to spend the same amount twice. It has also made it easier to get coins and helped Bitcoin get through hard times. It has helped Bitcoin avoid a centralized control of information and let all coin holders take part in making decisions. When companies interested in Bitcoin tried to increase the block size to allow more transactions per block, node operators and developers fought hard against the idea. This has shown how strong Bitcoin is because financially powerful groups were not able to force their will on the network. How does a rise in inflation change the price of Bitcoin? Since it was made, Bitcoin's value has grown faster than inflation as a whole. Even though each investor may have a different goal, like making money, getting richer, or using it as a safe place to keep money, Bitcoin is often seen as a way to fight inflation. The exponential rise in Bitcoin's price shows that its value has grown faster than inflation. Even though 2021 wasn't a big year for Bitcoin, the cryptocurrency still went up by 59.8%, which is more than most countries' inflation. The graph below shows how much the price of Bitcoin rose every day from October 2013 to March 16, 2022, in US dollars. A daily rise in the price of Bitcoin, in US dollars, from October 2013 to March 16, 2022. Can Bitcoin be used as a hedge against price increases? Statistics show that Bitcoin has done much better than gold, real estate, and stocks when it comes to keeping up with inflation. Even though you should be careful about things like the regulatory climate, Bitcoin as an asset works very well against inflation and beats it by a large margin. Statistics show that the odds of holding value in Bitcoin are much better than holding value in gold, real estate, stocks, and other assets. Because Bitcoin is decentralized and has a limited supply, it is in a unique position as a tool that can help fight inflation. If you enjoyed this video, don't forget to subscribe to our channel.